Smart money is loading gold. Here's why. While retail traders chase crypto pumps and overhyped tech stocks, the world's biggest investors are quietly accumulating one thing: gold. You won't see it trending on social media or flashing across your trading app, but behind the scenes, institutions are buying more gold now than at any time in modern history. Central banks, hedge funds, and sovereign wealth funds have all been increasing their exposure. In the last 12 months alone, over 1,000 tons of gold have been purchased, the largest accumulation since records began. And here's the key point: these institutions don't make emotional decisions. Every move they make is strategic. They're preparing for something. When the very same entities who print money start buying real assets, you have to ask yourself, and what do they know that the average trader doesn't? The answer lies in the state of the global economy. Inflation might appear to be cooling, but the deeper issues haven't gone away. Government debt is at record levels, currencies are being devalued through endless stimulus, and confidence in paper money is quietly eroding. This is exactly why smart money turns to gold. They don't see it as a speculative play, they see it as insurance. Gold doesn't rely on corporate earnings, it doesn't default, and it doesn't get printed out of thin air. It's the one asset that holds its value when trust in everything else starts to crumble. Smart money doesn't buy gold to get rich, they buy it to stay rich. Every financial cycle ends the same way: too much debt, too much leverage, and too little trust. And every time that happens, gold becomes the reset button, the one form of money that doesn't depend on anyone's promise to pay. Now, here's where retail traders get it wrong. They jump into gold trades after a big breakout, chase short-term moves, and panic at the first pullback. They treat gold like a lottery ticket instead of a long-term position. Professionals don't think that way. They view gold as a stabilizer, a core asset that balances risk when everything else becomes uncertain. They also understand what drives it. When bond yields fall, when real interest rates go negative, and when the dollar weakens, gold tends to strengthen. These are not random market moves, they're predictable relationships that professionals study and act on. Meanwhile, retail traders focus on the headlines. They talk about the next hot stock or the latest meme coin, while institutions quietly reposition for what's really coming: volatility, inflation persistence, and a possible breakdown in market confidence. Here's something else worth noting. For decades, gold was seen as outdated, something your grandfather held, but that narrative has changed. In today's world of digital instability and financial manipulation, gold is once again being recognized as the one true hedge against systemic risk. Think about it. When was the last time you saw central banks buying tech stocks? Never. But they're buying gold quietly and consistently because they understand what's at stake. And that's the difference between retail traders and professionals. Professionals plan years ahead. They build positions before the crowd notices. Retail traders react, and by the time they do, the big money has already taken profit. So if you want to think and trade like the smart money, stop reacting to noise and start understanding the deeper picture. Watch what the institutions are doing, not what the media is shouting. Gold isn't about hype, it's about protection. It's about preserving purchasing power when everything else loses credibility. And if history repeats, as it always does, this quiet accumulation phase could lead to a major repricing in the years ahead. The question is, will you be positioned before that happens or after? If you found this video valuable, make sure to hit the like button, subscribe to the channel, and turn on notifications so you don't miss the next market breakdown. It really helps the channel grow and reach more serious traders like you. And if you want to learn how to trade with the same discipline and mindset as institutional investors, download my free 2% trading blueprint. It shows you how small, consistent gains can compound into serious long-term wealth. The link is below. Stay focused, stay disciplined, and trade smart.